This podcast is for informational purposes only and is not an offer or solicitation of any offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome back, everybody, to Avoiding the Crowd podcast with your host, Maj Soueidan. I'm your producer, Robert Kraft from SNN.Network. We're recording this on Labor Day. This is a Labor Day episode. We have a lot to go over. I mean, last week was a pretty interesting week, and I think we have a lot to talk about today. So with that, Maj, how you doing today? What's going on?
I'm good, man. Enjoying the weekend. A long weekend. I played some tennis again, went to the gym, hurt my knee again. Perfect weekend.
So the cortisone shot didn't work?
Well, not until I thought it did. But I was in bed for 2 days, and I just started walking around today.
So, I mean, what did you, was it just like pushing off on the serve or like what?
You think as your cortisone shot, you don't know you feel in pain. So until 3 hours later when you're done. So I guess I overworked it, and I'm definitely going to call my doctor and say this isn't going to be working for six months. he's like, call me back in 6 months. I was like, I don't know how you feel. I'll call you right now. That's how I feel.
That's funny. You need a couple more MGs on that one, dude.
yeah. Probably need surgery, unfortunately.
Oh, it's too funny. And I just had to say, like, I have Palm Springs in the background. I got Palm Springs on my mind. We're finally, this is our first family trip since November. So we're like, get out of Dodge.
The little one.
Yeah, with the first trip, I ask everybody to pray for us so that she sleeps she's actually a great sleeper. She can sleep at our home, at her grandparents' houses, but hasn't been to a sleeping overnight at an Airbnb. So we'll wish us luck, man. It should be interesting. I just hope she gives mom and dad a couple extra Z's, man. We could use
good luck. Praying for you.
Oh, thanks, dude. So anyways, let's dig right in, man. Last week, like I said, we're recording this on Labor Day. By the way, happy Labor Day, everybody. Hope you had a great Labor Day weekend. Last week, volatile week, so a lot of ins, a lot of outs, or a lot of ups, a lot of downs, mostly downs. And, it's interesting because on my podcast, on Planet MicroCap and some of our other shows and some panels that we've even been on together, we've talked about a lot how, and I think this is kind of blown out of proportion about how a lot of investors, maybe that focus specifically on microcaps, a lot of their advice is like, don't look at the markets every day. Don't pay attention to what's going on in the Dow. But it's kind of hard on, especially when you're seeing a day or a couple days like it was last week, and especially in these turbulent times that we're in right now. You see market down 2%. You're gonna look, right? You're gonna see how that's affecting your portfolio, right? Like, I mean, it was an interesting week. So I figured, what's some of your take on what happened last week?
Yeah, man, we're human. We can talk a big game. Hey, we don't care. But that definitely can affect you. The question is, how do you react to it when you do see it, right? When you do see your red, that small peak, and you see what's going on. Because it was actually been a pretty wild ride. Actually, for microcaps, some of the volatility started even before last week. There's been a lot of pullbacks in a lot of things, at least that I own. And but look, I mean, the market's been up, in a straight shot since the bottom of the coronavirus. We had one bad week and people start getting all bent out of shape. It's expected. We should want it. We should want this market to reset and then maybe find some opportunities. And as a long-term investor, I love these pullbacks because it gives me a chance to make some short-term investments, and bring some short-term income as a full-time investor into my, out of my portfolio. So your first reaction is, it hurts taking a short-term hit, in your portfolio value. But in the end, if you can go in there and find some value, and even maybe buy some of the stocks you already own, you can just come back even faster. And that's how I'm viewing this pullback here. I think a lot of it, I have no idea, why markets are volatile all the time. I don't make those predictions or market timing, but I think a little bit of it right now is you have this sort of maybe rotation going on in the market. I mean, you definitely had some just crazy stock, some blow off on the top, some stocks going crazy. Apple and Tesla splitting, all these euphoric kind of things happening. We might be coming out of with the coronavirus rotation, I guess, possibly. The market's trying to figure out once the economy keeps opening up, how does that look for who's going to take the leadership in stocks? So you have a lot of these COVID stocks coming down really hard, also, and the challenge there is going to be if you want to play that area, which one of these stock drops are going to be more permanent, where a lot of companies aren't going to benefit as much anymore from serving certain needs and that coronavirus created for them, and how many of these are going to have a longer term runway. And I think maybe the markets, that's one thing going on. I think at least I've noticed it in the few stocks I own in that sector or in that area. But I think it's healthy, and I'm looking forward to it and looking for opportunity.
Yeah, I mean, look, when you see the markets go down a little bit, most savvy investors that either have a watch list or they may be waiting for a company that they like, but maybe just not at the current valuation. You're like, oh, a little dip, maybe a couple ideas that I like, they're starting to take a little dip too. I mean, that's kind of the classic thought process. But I mean, you're a little more nuanced. You tend to look somewhere a little differently when it comes to when you see these drops. What's some of the things that maybe you look for when you see a little bit of volatility going on the downside in the macro, some of these general markets?
I don't think I'm not saying different than anybody else. I mean, there's lots of people who look for these volatile markets to establish positions. But I like to try and, as you said, look for stocks that I wish I had more of, or maybe I sold in the last run and then they come down the price I didn't think they would come down to buy back. But I look for kind of clues to help to be more confident in any moves I'm going to make. And I think something we've talked about in the past a lot, and I talk about it seems like every 3-4 months, are the Form 4 filings and watching insiders, what they're doing, especially in the smaller capitalized stocks, because I think it makes more of a difference. It's more impactful when I see these smaller companies, buy management buy shares in their own company in the open market. These are smaller companies. The CEOs probably aren't as wealthy yet as some of the larger companies. CEOs, so when they make these bets, and a lot of them are already all in, it means something to me. We're looking for. So again, once we get to the last 2 weeks, I've been paying close attention to Form 4 filings, because if I look back at past more corrections, not so much COVID. There wasn't I didn't notice a lot of insider buying until maybe the end of the trough in COVID. But almost every crisis I've been through, I've always looked for that, and you've seen a lot of insider buying to help drive confidence in what I'm doing. So I'm starting to see it now in a few stocks, generally that I own actually, and actually some stocks have come down to COVID levels, and we're not even in that situation yet. So I thought that was really a gift there. Particularly, I can talk about a few of them if you want to, but that's what I'm doing right now. But I'm going to try and share my screen for 1 second, I guess, to show you. Again, just if you're new to Form 4 filings, many of you probably aren't, so this is going to be a little boring for you. But we're looking for open market buys. We're not looking for companies that are receiving options or free stock. We want them to put their own money in their companies. And some signs we look for example, by the way, we're doing that is some signals. We like it when actually companies buy stock at their highs, when they're at their high. That shows me. I say companies, management teams. We like it if we haven't seen a Form 4 buy in a long time, and all of a sudden we see some buying going on. And we like to see if we see outsized buying going on, some really big shares buying going on that is not characteristic of what they've done in the past.
Imagine.
And we like looking companies that have people who have actually been successful in picking bottoms, and following them.
Hey, Maj, let me ask you a question. Is there some kind of metric that you use when you're looking at, let's say, CEO goes in, does an open market buy? Is there any type of metric that you use, like a percentage of, let's say, the dollar amount that was purchased over their yearly salary or something like that, to, just to kind of get an idea of like, oh, they just bought 3% of whatever that metric would be called. I'm sure there's a name for it and I just don't know. I mean, do you consider that?
That's fair. Obviously, the bigger the bet, the more excited you get. But I even look at small buys as a sign. I mean, the companies we invest in as a microcap investor and nanocaps are illiquid companies. So just because the CEO might all go in there and buy 500 shares of a $5 stock, maybe he couldn't buy one, maybe. So it's, I look at it in respect of everything. And it all works together. If an insider bought stock, say, for 1,000 shares, versus a $5 stock, but that's the first time he bought like in 2 years. I start, and take a look at the percentage of what he owns. You can do that and stuff. But I start seeing it's a signal. It might not be as strong a signal as a bigger buy, but it's something that at least worth watching. And it's just the best way, in my opinion, for even a novice investor getting involved in the stock market wants to actually have success. It's one of the best ways to start really building a pipeline. I mean, I venture to say that if you were a new investor getting involved in the stock market and you wanted one thing to do, make this one of them. Really crush your heart into building a portfolio of these kind of stocks. Of course, you track Form 4's, the right ones. Then you do research beyond that to kind of solidify the pipeline.
I mean, look, for anybody, if this is your first time ever hearing Maj, you'll learn very quickly he has two middle names. It's InfoArb and Form 4's. So it's Maj, InfoArb, Form 4, Swedon. Just so it's clear.
Obviously, it's not wealthy, obviously.
Yeah, right.
I'm working on that.
Yeah, right.
Wishful thinking, I guess, is better.
Yeah, right. Yeah. So, all right, Maj, you say you're about to share a screen. Let's see.
I'll share a screen. I'll show you, like we talked about, direct purchases, and I'll go over one of the stocks we're looking at, and maybe I'll mention a couple other ones. But let's go here. Is that there? I don't know what's coming up here. Here we go.
Don't worry, I'm not editing it out. It's Labor Day. This is going out as is.
Can you see that?
Nope. And for those who are just listening to this, I can't see a screen.
Hold on, I got it. We took it off already.
I made it so you could multiple participants can share it. Yeah.
Now I gotta find it.
There we go.
It happened here.
Don't worry. Just make sure you're listening to this at this part at 1.5 speed. Okay. Oh, here we go. Bang. There it is.
You can see the article.
I can see the article.
Right.
Put your phone on silent.
You heard that? Oh my god, I don't even hear that vibration.
Throw it on the couch or something. I tell you this. You have been doing good though. You're not banging the desk this week though, so we have some market improvement.
All right. So here we go. Oh shit, it got a little slow. So you see this, Bobby?
It's a little small. Can you enlarge it a little more?
Well, you can.
I mean, you can kind of more or less see it. Just explain away, Maj.
Yeah, but what I really want to get to here is not even about this stuff here. The picture we call the secret codes. So you want to this article, which I'll have you share if you want to share it, shows lets us know what codes to look at in a Form 4 filing to understand if we have an open market purchase, or there's like real money being put in the stock as opposed to like grants and other kind of free money kind of thing, or free shares. And so you have here, P is an open market private purchase, S open market private sale, and the V is a voluntary reported earlier than required. So it's still related to it could be related to a P or an S also. But we're looking for the P's and the S. And then actually, and for this purpose, I don't really care about insider selling that much. I'm really more focused on insider buying. It's just a bit of a better indicator. So I'm looking to see that the Form 4 has a P in the right area. So if we look at one company that I've, obviously talked about a lot is CareMD, Repromed Systems. It's a home healthcare company. They've held it for, since 2007-8 now. And it had a really nice run from 10 cents back then to I think got as high as $12 or $13 this year. It's been an amazing run, and a part of that run that made me even more confident when the stock was actually around 40, 50 cents, 30 cents was the emergence of Joseph Manco of Horton Capital Management. I guess he's an activist to some degree. He didn't. I think he got involved with the company through a small offering back several years ago, maybe 13, 14, if I remember correctly. And he was friendly added to the company at that time. Was not on the board. Eventually, the company started having some problems, some quality control issues. There were some FDA issues around that time. Shortly after that, he got involved. But yeah, he still started buying in stock, even though the company received an FDA warning letter, which took a couple of years to resolve. He was heavily buying stock during that questionable time for the company, helping me, make me feel a little bit better about my investment. And he just wouldn't stop buying. He kept buying at 50 cents. They eventually resolved the problem with the FDA. He was buying at 50 cents. He kept buying the whole up all the way to 250. I think 220, 225 was his last purchase. I believe that was early 2020. Or maybe it was, I can't remember the date, but maybe it was 2019. But so, he obviously had, I watched Joseph Manco to see what he does and see if he ever comes back in the stock. So stock ran out of 11, 12 bucks, and then, or 13 bucks. And I hadn't seen anything from Joseph. And recently the stock pulled back really hard, all the way like in the low sevens here out of the blue. The stock had a great run. It was probably selling a premium valuation. And it could be thought of as a coronavirus play. I mean, indirectly because they're a home health care company. They sell home infusion therapy system. And maybe a lot of that money is coming out of it now. And so it just had this incentive selling for, a couple of weeks. And all of a sudden, boom, there he was again, Mr. Manco, buying stock. And this is the second form. He filed two Form 4s in 2 days. The first one was only 6,000 shares. I'm sorry. This is last week. And the second one was 25,000 shares. And you notice here it says P here in the code. It was a direct market purchase. You'll see it was 25,000 shares, and the average price is $7.25. You see how many shares he owns here, owns there. So he actually, what I want to go here too, I want to show you. He has several different funds that he owns the stock in, as you can see here. Now, if you go to the exhibit, there's a little one on that right there, a little one. So you go down to here and you scroll down to Form 4 at the bottom for the footnotes. You'll see a 1. So we see Exhibit 991 of this Form 4. And we go here. You just go back and there's an exhibit here, as you can see. And it just confirms what we thought here. The price reported in column 4 is a weighted average price. Were purchased in multiple transactions. The prices range from $7.15 to $7.39. Now that so those 2 days where he was buying stock, the stock was down pretty hard, and he kind of gave support. So that was a great sign. We put a call to action out in geo investing. Hey, we're going to add a little bit of trading shares around our core portfolio. We sold some on the way up, and now we want to maybe buy some back here on the way down. And I did not think I would see this price. And what's interesting here is that, Manco's last price before this was $2.20. Now he's willing to pay $7, a few months later. So that to me is a huge bullish sign. Anyway, there's actually some info arb on the last conference call Q2 that I don't know if any people caught on to, where they made some commentary about their international marketing goals moving forward, and that maybe it's as big as the U.S. opportunity. I just think the stock probably got ahead of itself. Selling on high multiple, had to pull back some. So it's going to be interesting to watch this play out and see what happens here. But those are kind of things we look at. So that was a little bit of how the thought process went on there, And there's a couple other companies you might want to look at, I guess. Another one was Pacific Ethanol, PEIX. Hate this company for years. Hate what they do. They're a leading marketer and producer of low carbon renewable fuels. Unpredictable business, real volatile. And there's a lot of things out of the control of the price of the company in terms of pricing. But they've made some changes recently to try and address that. And one of them was actually getting involved in the COVID-19, I guess, play here, where they transitioned some of their idle plants that they had stopped for some of their business that was unpredictable, and restarted them to actually start making alcohol products for hand sanitizers. So, and I thought that was interesting, and they had a great Q2, I believe it was. And the forecast looks really good for the next 18 months. And I think it's one of those things where you might actually see one of those COVID-19 things that might last for a while, actually, well beyond many other plays. I don't think the washing of hands and sanitization is going to go away. It's like a really low multiple. The stock really hasn't gotten much. It's had a pretty big run from like $1 to $4 area. But then it's just like stabilized even after the Q2 earnings. And then we saw some really big some really big buys are coming in recently. Some huge buys actually. So we're really excited to watch how that plays out over time. So we don't own a big position, it's a small position because I haven't entered management yet. And I bought it as more of a shorter term play originally. But when I saw the 4 plays come in, I'm a little more intrigued about understanding more about what's going on and if this business has become more predictable. If there's any more assets that you can sell to pay down some debt, because they do have some debt. So you can look at a scenario where they can maybe pay down all their debt, which has been a problem of this company, be a more predictable business, and the company might be selling at a PE of like 4 or 5 now on some future estimates that we came up with, which might be a decent PE if it was in its all business, but if it becomes more predictable, reduces the debt burden, has a cleaner balance sheet, I could see the PE really expanding a lot more. So that's something we're looking into. And lastly, there's LSYN, Libsyn. This is a pretty interesting company, very interesting story. It's a podcast company. They have a podcast platform. It's around like in the mid $3 range now. And we saw some 4's come in from a new CEO who would join the company recently. And the stock's trading near its highs actually, which was interesting, which is nice to see. And there's buying going on there. So that's one of the positive flags we look for. CEOs, or insiders buying stock at their highs. Which, by the way, PIX is in that area too. But was an interesting backdrop on Libsyn, and I'll close at this body after the story. Is that Libsyn was a spinoff of a company. I hear for the name. I just the symbol. The symbol, interesting, was FU, and it was a fraudulent Chinese company that we busted. And it got halted, and we had a report on it. Stock went down a lot, and it was halted for like I think 8-9 months. I was paying a ton of interest. I made money in the stock in the end, but not near as much as I would have made, because during the halt, stock was around $3 or $4, and during the halt, you're paying interest on your short. And I think the short interest may be 70-80%. So, so typically that we thought accordingly, the symbol FU was according for the stock, because we're getting fucked by, paying interest in this thing, probably paying it to the insiders who own the stock, and then, but anyways, interestingly speaking, the CEO on that company, I think his name was Chris Spencer. I'm sure he was the CEO. Yeah, CEO. And there was a Libsyn was a small part of the company. So basically it was kind of a media company doing stuff in China. But this Libsyn company was a US company, this podcast platform, that they weren't doing much with. The stock got as low as pennies. And they spun this Libsyn off around 10, 20, 30 cents years ago. And this is all about 2014, I think, is happening, if I remember correctly. And so now that stock is $3 or some cents. So this CEO was able to take this podcast company, do something with it. And I guess some activists got involved and wanted this guy out of the picture, though. And I think they wanted to get the whole team out that was still there from remnants of the old days. So interestingly, we owned this stock. We owned it for a little bit of time, I think from the 2s. And my brother actually wrote the article on this one, which was a pretty good article, which is a good backup of what happened. But it's ironic that we're buying a stock basically remnants of a stock that was part of a fraud that we busted also. So it's come full circle, and it's interesting that now we'd love to see that the old management team is gone, new management team is in. The podcast kind of place is like interesting play here now. Like an interesting.
Maj, I will have to say, for full disclosure, we don't own shares in Liberated Syndication, but we also publish this on Podbean.
That's fine. Yeah. That's fine. Well, for now. Yeah.
I've actually, in the interest of transparency, I've looked at both platforms, but you know what? I just happened to find Podbean first, and I haven't had any issues with it.
Well, let's pick your brain about it because you own the stock, so I'd like to hear you think about it. Maybe sometime we can talk about it and compare them. It'd be great.
For sure.
Pure link style. Yeah. So.
There you go. Actually, I mean, if I could say, and again, not a shareholder or anything like that, I think it, for at least from a podcaster perspective, when it came to evaluating the two at the time, and this back in 2015 when I started Planet MicroCap, it really Podbean was the first one that I saw. They just marketed the hell out of it, and I went with that. And at the time, it didn't really seem like much of a difference. So I think at the time Podbean might have been a little cheaper.
But I don't even think. Well, to tell you the truth, I mean, I'm not impressed with the growth that Listen's had recently. They had a lot of growth for a couple of years, and then it's really slowed down. And I thought it would be actually accelerating right now during COVID and stuff. So maybe that was part of the reason they ousted management, because the current activists who put in a new management team probably thought there's a lot more growth opportunity that's not being exploited.
Yeah. No, I mean, look, I think the fact that, if there's any indication about podcasting, we launched 3 shows in the last month and a half, and it seems like everybody has a podcast nowadays. So, it's only growing. It ain't stopping.
No. I'll actually send you that fraud report too if you want to post it.
Yeah, definitely.
Pretty cool. Brought back some memories for us.
Oh, absolutely. Hey, by the way, I also have to read this tweet that Mosh put out last week just to give you more of an indication of how much he loves Foreign Force. He tweeted out, and I quote here, "It's amazing how my heart flutters when I see a Form 4 filing in a stock I own, showing that management and or directors are buying shares in the open market. Helps explain why I'm 50 and still single. I have a serious problem. Have a great holiday weekend." Just want to make sure that was clear about how much Maj loves Foreign Force.
It's mostly true. So, actually, today I was walking down the street. I saw a person wearing like a Quicksilver shirt, and the first thing I thought was brought back memories of Quicksilver. I owned the stock back in the day.
Yeah. That's a sad story. The founder, he passed away a few years ago. That's a sad story. But
I think the symbol was QIK. I forgot. I don't think it was that.
Hey, as an active follower of the surf industry, that industry's just gotten shrunk so much.
Yeah.
Oh my
gosh. Life is Good shirt. You wear those. That a big surfer. Life is Good. Is that a good? That's a.
Maybe that was back in like the early 90s. I don't know. I was like when like the brands were huge, it was like Billabong, Quicksilver, Hurley, Rip Curl, and this is a skating brand, but I remember Stussy. Remember Stussy?
I remember them.
No,
I saw a Hurley shirt. Someone in a Hurley shirt today. Someone actually in the gym.
Oh, okay, there you go. Yeah, they're still the Hurley shirts are still around there. They haven't gone away fully. All right, well, Maj, I think we're rounding the bend here. Real quick before we get some final takes. Full disclosure, if you do own any, I own all 3 of the stocks I talked about there. KRMV, LSY, and PIX. I do own. And PIEX is a short. I bought it recently. I've owned KRMD and LSY for a little bit of time. So. Got it. And also from my perspective, full disclosure from my end and also for SNN, we do not own any shares of any of the stocks that were mentioned today. Now, Maj, since we're recording this on Labor Day and this is going to go out early morning on Tuesday, give us with everything that happened last week, you got to take on what people may see this week, or your thoughts on what you might see?
I have no idea. I just know I'm looking for more opportunity on these 4's. Yeah, I wish I could tell you that. So if I would tell you, I'm probably gonna be wrong. All I can tell you is if I see a lot of red, I'm walking away. That's the biggest prediction I can do.
If you're right, you're gonna walk away. Is that what you said?
If I see red, I'm walking away. But a Geo that we are actually interviewing a couple companies live on Geo Vesting this week.
Oh, cool.
So
Nice. Do you want to say which ones now, or you can't?
I can't. I don't want to say just yet. I gotta
All right.
We're working on it. We got 2 this week. These are actually and one next week.
Oh, cool. All right. Well, let's end it there, dude. Where can everybody go and follow you on social media?
Yeah, go to geoinvesting.com. You can find our website, learn more about us, and you can take a free trial if you're interested. You find me at Maj Geoinvesting, my personal Twitter, and Geoinvesting is at Geoinvesting.
Perfect.
And you can call me at 267-246-3263 if you want to talk. Reach out to me.
Very good. All right. Well, with that, you can follow or listen to Avoiding the Crowd podcast wherever podcasts are available. That's including on the website, avoidingthecrowd.podbean.com. And you can follow me on Twitter at Bobby K Craft. That's BOBBYKKRAFT. And you can also see the video version of this on our YouTube, on the SNN.Network YouTube channel. And that's youtube.com/SNNWire. All right, Maj, let's go salvage the rest of this Labor Day that we can. What do you say?
Excellent. Yep. I can do the weekly right now.
Nice, dude. Get after it.
Yeah. All right, buddy.
All right, man. Take care.
Robert.
This podcast is for informational purposes only and is not an offer or solicitation of any offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.